Hi everyone, and welcome into the EcoInvestment update for January 24th, 2016. And I hope those of you who got nailed by the big blizzard Friday and Saturday are able to dig out safely and get your lives back on track. That looked like a whale of a storm. Well, we actually have a sunny day out here in California, about 60 degrees, but it's always nice to sit by the fireplace and enjoy it in wintertime. Let's get down to it though. As I suspected we would last week, we did have a rally. We had a big time drop Wednesday morning, I think down 519 points. On the Dow Jones Industrial Average, we ended down 250 points. We recovered half the loss there, and then we went on to gain another 200 or so, 250 points. So on balance, it was a gain for the week, and we may have put in a significant short-term bottom around the 15,500 level right in there. Now, I'm not saying I'm getting bullish, but I'm a little more bullish than I was in August. If I was still trading, which occasionally I do, this would be one of those low-risk opportunities to any kind of pullback that comes this week, maybe Monday or Tuesday. We may drop back a couple hundred points and test that low of Wednesday morning. And on that test of that low, if it looks like we're going to hold, you might take a little bit of a nibble and buy some of these beaten down stocks, or the broad S&P 500, something like the SPY, SPY on the New York Stock Exchange, or the DIA, the Dow Jones Industrial Average, what's called the Diamond. It's all 30 stocks on the Dow, all rolled into one stock. DIA is the ticker symbol. And what you can do is you could possibly see yourself have 1,000 point, 1,500 point gain here as we go up and try to rally towards where we were in late fall and into December. And if you're wrong, your downside is only a couple hundred points, meaning if it breaks the low of Wednesday, well, we certainly don't want to be around anymore and we get out of our position. Well, that distance is very small. That risk is very small from where you get in maybe to where you have to get out if you're wrong, whereas the chance to make money is 4, 5, 6 times, 7 times greater. So it's what we call a great trade if you're risk on in the market. It could be a 6 to 7 to 1 shot. So just to give you an idea, I know when you think, like last fall and summer when I was talking about the market's bad, and I was getting people saying it's not bad, Rosie, we're holding in there, and then of course it did get obviously bad, and now everyone is obviously bearish about things now. But we have to be nimble. We have to change our mind, and this is how traders make money, by fading or going against the flow a lot of times, and seeing things as they are and looking at trade opportunities and things like that. Anyway, I do believe no matter what that this bottom of Wednesday will be tested with another down thrust sometime this week, and we'll probably recover upward and go a little further in some sort of rally before we turn down in earnest again. We have to let events in the economy catch up with what the market said. Right now we have this disconnect between people scratching their head and saying, gee, car sales were at an all-time high last year. Things are good in the world, and a market that's saying beware, bad times are coming. And of course, jobless claims jumped to about 300,000. I mean, some things are going on under the surface. Retailing is just a disaster pit, etc. But we have to kind of keep an open mind here. So there may be a good trade opportunity, and a correction might carry up to 1,000 points or so before we start heading down. Nothing goes in a straight line up or down. Now, if we do take out that low of Wednesday this week, then I'll have to conclude that there's really some bad things coming on the horizon apart from just a normal recession or something like that. Some people must really know something out there to continue selling into that, even after that spike bottom we put in on Wednesday. As I mentioned, the economy is showing signs of deterioration, most evidently in the job situation. There, the jobs report, the first-time jobless claims were looking weak, and I wouldn't be surprised if continuing claims start to rise again as we start the cycle of layoffs and things like that. It's inevitable that our economy will be impacted by what's going on in Europe with the slowdown there and all the immigrant refugee crisis that's grabbing the headlines, all the drops of energy and oil, and people are all excited about a $5 rally. After dropping, $120 off the peak, it's amazing what gets people so excited. But the bottom line is the confluence of factors. Then you put Asia in over top of that, and it's going to be very difficult to envision a strong growth scenario here. At best, it may just be a time of muddling through, and at worst, we could be on a significant economic downward trajectory. Well, stay tuned. There's a possible little trading opportunity for you. It's one of the things we used to take advantage of on the trading desks, and a little more information or my thoughts about the state of the economy now. Thanks for watching, everyone, and I will see you next week, and thanks for being here.